What if I told you Ghana's entire bond market just lost nearly 60% of its trading volume in a single week? This is Kenya News Update today. Coming up, you'll discover why GH Sense 2, 74 billion is causing panic among investors, and what this massive slowdown reveals about the hidden cracks in West Africa's financial system. Meet the February 2030 bond. For months, it's been the undisputed king of Ghana's secondary market, the anchor holding everything together. But this week, something shifted. The market liquidity softened dramatically. Turnover plunged 59.4% week on week to just GH Sense 2, 74 billion. That's not a dip, that's a collapse. But here's the twist. This isn't just about one bad week. This is a seismic signal about where smart money is hiding and where it's running from. The February 2030 paper continued to anchor activity, with volumes hitting GH Sense 54 million. It's still the bellwether for price discovery. But look closer. Investor positioning remained heavily skewed toward the 2027-2030 bucket. This short to medium-term zone accounted for 62.2% of all volumes. They traded at a weighted average yield of 15%. That's high. That's investors demanding serious returns for perceived risk. And then, something revealing happened in the longer-term bonds. Activity in the 2031-2034 segment was more measured. It accounted for 37.8% of turnover at an even higher weighted average yield of 15.56%. The market is screaming that the further out you go, the riskier it gets. The 2035-2038 tenors saw barely any action, clearing around 15.44%. But here's what nobody's talking about. This freeze might be temporary. Databank research says there's scope for a modest pickup. Why? Because asset managers are about to rebalance their portfolios. They need to manage liquidity to satisfy year-end regulatory capital thresholds ahead of final book closures for 2025. They're playing a dangerous game with the calendar. The implications are massive. Some say this is just a seasonal liquidity crunch. Others see it as a vote of no confidence in Ghana's longer-term economic stability. The controversy is real. If investors are only comfortable with bonds maturing before 2031, what does that say about faith in the next decade? But if the activity picks up, was this just a blip? The payoff is this: a GH Sense 2, 74 billion trading week tells a story of caution, high yields, and a market holding its breath. Do you think this bond market crash is a warning sign or just a temporary freeze? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking financial news from across Africa.